Hey everyone, it's Rod with Power Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Also home to the best MJ community on the planet. Today is Sunday, July 30th. Hope you're having a great weekend. And in this video, we're going to dive into the MSOS Pure US MJ ETF chart. Things may get worse before they get better. Honestly, I'm not seeing anything in the chart that's really screaming bullish to me. But speaking of bullish, HMMJ, which is a similar ETF, but in Canada, it's actually looking really, really good. So we're seeing some strength in the Canadian LPs and producers versus the American producers. But we're going to discuss all that and more. I'll discuss what I'm looking at and what we can potentially expect for price action over the next few weeks and months. But before we get to that, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, all that good stuff. Take the bell, you'll be notified on any future live streams or whenever I post a video. So taking a look at the chart here, we are breaking out of this. We were breaking out of this wedge, and we were breaking bullish. Now we're back within that range and within that pattern. And you can see here, if we take a look at the RSI, we were seeing some hidden bullish RSI divergence, and the price is very, very close to breaking to a new low here. But one thing I would be looking out for is a potential bottom to be set once this RSI comes back and touches that line, and we can even just tighten it up a little bit there. And if we do come down and form support on that resistance line, then that could very well be our third test of support, and then we could, back test that and then go, so to speak. So realistically, we could drop another 16% or so before hitting that support trend line on the RSI. So that's something that we can be looking out for a potential bottom. So I'll give my bull and bear thesis at the moment. So we're on the bear side. Like I said, everything is definitely bearish. If we zoom out to the monthly time frame, you can see here we're nowhere near confirming a monthly uptrend, and we know we need uptrends on all time frames to be confident. Nowhere near confirming a weekly uptrend as well. So at this point, we're very, very close to the all-time low there at 505. We hit 508, so it's essentially a double bottom here at the moment. And then, like I said, on the daily time frame, lost the daily uptrend, and we basically came very close to hitting daily oversold there. But we did have a lack of resistance all the way up from that daily sell-off, about 25% just to daily resistance there. So I want to bring up the weekly chart again. Looking at the bear case, we were starting the weekly bounce, and it was just a weak bounce and a potential for a weekly bear flag. And if we take from the high to the low here, this wasn't really much of a bounce. So if we just go from high to low and use this as our potential bear flag territory and pattern to be watching, we have the high, low, anything under that 0.32 fib there is a weekly bear flag. And if we take the measured move, you just go from the high to the low, and then you move that out to the 0.32 fib, and it's saying that we could potentially be targeting about 285. But again, we need to lose the low there at 505, and I would say we need to lose $5. If we lose $5, we could be heading down in a hurry. I don't think that the most likely scenario is we're going to get to 285 because of the fact that we're so beaten down. And if we take a look, could even be a bit of an inverse head and shoulders here that's forming as well. We can just draw this out real quickly here on the fly. It's not the most prettiest thing in the world, but the psychology remains. So that's the bulk thesis, and in order to confirm that, we need to get above the high there at 725. But watch for that RSI as well to come into play as potential support and a bottom being set. But if we just erase that here, I do want to bring up the EMAs here. So the EMAs are very, very close to seeing a bull cross, and we had a bear cross with the shorter term exponential moving average 12 period above the 26. When those crossed, from that cross, we went down 87%. Now we're looking at the flip side where we're going to potentially see a bull cross, and it's more than likely going to create a massive rally once we do, because from the time we saw that cross bear, it's now been 735 days, right? So 105 weeks. And then one thing I need to see as well for a bottom to be confirmed and to be confident that we can say that the long-term bottom is in, we're potentially starting to head up to, not even 52-week highs, but just starting a new bull market. We need to see two, preferably three, but at least two weekly candle closes over this EMA 26 here, this white line. You can see here, since we lost it and confirmed resistance, it was resistance again. We got above it, we closed one candle, but then went right back down, and we just continued to see the bears take over. So now we need, and look where we topped out again here on this weekly bounce right at that EMA 26. So that is an absolute brick wall. That's going to be the line in the sand to be watching for. So if you're looking for a bullish entry and a long-term entry, again, this isn't financial advice, this is for entertainment purposes only. I'm just shooting this out there. If we saw two, preferably three, but even two we could easily see from there, that would be upside potential of about 130%. So this could be a nice swing trade with a clear stop loss below $5. You could, just enter, in my opinion, if you just enter long term, there's no way you could go wrong at these price levels. So watch for a potential 2 weekly candle closes over that EMA 26, and that is sitting at $6.31. And then if we take a look at the weekly time frame indicators, macro indicators, it's not looking good. You can see here we had a weekly candle close below the 10-week moving average, which is bearish. And then we had a very, very big bear cross there into the negative territory on the stochastic, and the MACD isn't too far away from curling and seeing a bear cross here as well, which would mean even more downside. And then the 50 weekly has been resistance as well. So if we can get over that, we've got some runway up to about $14, maybe $15 psychological. And that 50 weekly sitting there at 790. We aren't that far away from seeing a golden cross. We're starting to see that curl. And again, it's just like the weekly EMAs, right? When those cross bullish, when we see a golden cross, we're more than likely going to be heading up to $10 in a hurry, maybe even $15. We had the death cross with the 50-day, the shorter term above the 200-day moving average. When that happens and they cross, that's a death cross. Like I said, price was at about $37 and dropped down to $5. Now we're seeing the flip side of that with the shorter term, the 50-day moving average below the 200. If that happens, that's called a golden cross. And we could even see a bull cross of the 50 and the 100 weekly moving average. The 200 weekly isn't established yet based on not enough trading history. So if we can see these weekly indicator, if we can see these moving average cross bullish, that would be, in my opinion, we'd easily go up to about $25, 25, maybe even back to test all-time highs there around 50, because that is extremely bullish, and we're starting to finally see those start to flip the other way and trend bullish, just like we're looking at in the daily time frame. This will happen way before the weekly happens, so we'll be watching for a golden cross to occur, and then we'll be watching for the weekly for even more momentum and just clues that we could see a lot more upside from here. And I mentioned earlier that HMMJ, so Canadian MJ, Horizons Medical MJ Life Sciences ETF on the Toronto Stock Exchange. You can see here it had a weekly candle close above the 10-week moving average, closed right at the high of the week. We're extremely bullish here on the stochastic and the MACD with the black above the red, and it's starting to go parabolic here at the moment. So this is looking really, really good. This is definitely a great setup. And then if we take a look at the daily time frame, again, the more names that have golden crosses, the better. And you can see here we're above the 50-day moving average. MSOS is back below its 50-day moving average rather. So it's very, very bearish at the moment. Things could get a lot worse before they get better, I'm afraid. It's not, I wish I had better news for you. It's not what I want either. I'm ready for the bottom to be in just as much as anyone. It's been a brutal bear market, but the great thing is it's looking like over the next 2 to 3 months into the fall, we could potentially see, we have August recess right now. So there's nothing going to happen with regards to safe banking, but we know there's a big push into the fall to get that passed. And we could even see that October is going to be the 1 year mark for when Biden asked HHS to continue to consider its reclassification. So we could even get rescheduling to Schedule 3 or even descheduling. We'll see. I think rescheduling to Schedule 3 is the most likely scenario. But let me know in the comments below which one do you think is the most likely to play out in the end of the year. Going to end it there, though, it's Rod with Pow Group. Thanks again for joining us on the Pursuit of Wealth. Hope you have a great rest of your weekend. We'll see you in the next video.